A single dollar enters the system. But where did it come from, and who truly benefits from its creation?
Money controls governments, companies, wars, and even your future.
But most people spend their entire lives earning money without understanding what money actually is.
Why do some people stay broke forever?
While others become rich, even while sleeping?
Why do economies collapse?
Why can governments print trillions? But your life somehow becomes more expensive? But at the very end, a giant machine that moves money between everyone. And almost nobody sees the full map. Until now. In the next 20 minutes, connect every major piece of the money system together. How money is created. Banks multiply it. How debt traps people. Why wealth always flows upward.
But at the very end,
I'll answer the one question nobody talks about.
if governments can print unlimited money,
why isn't everyone rich? Money began as a solution to a problem. Fresh cod for sale. Get your fish right here, best in the city. Who wants it? Going fast.
The fisherman needed apples, but the trader had no use for his catch. This breakdown in exchange was a major hurdle for the nascent economy.
So humans invented money. It changed forms many times. But its purpose stayed the same. Money is simply stored value. Money allows humans to save value for the future.
the farmer diligently sells his harvest, ensuring every coin is saved to secure his family's warmth against the inevitable winter. Trade exploded across civilizations.
Money connected the entire world together. But carrying gold everywhere was dangerous. So banks introduced paper receipts representing gold.
For centuries, trade relied on heavy gold. But with standardized paper notes, commerce became easy, efficient, and accessible to everyone.
Today, most money isn't even physical anymore. Modern money mostly exists as numbers on screens. Which means money is now largely based on trust. Trust that banks will honor withdrawals. Trust that governments will protect currencies. And trust that everyone else will continue accepting it.
But once you understand that money is built on trust, the next part becomes shocking. Here's where things become strange. Banks don't just store money. The banker creates new money at an unprecedented rate, fueling the economy. This system allows banks to expand money far beyond the original deposit. One deposit can become many loans. Most people believe banks lend out existing money. But in reality, banks create money when they issue loans. A loan literally creates brand new money in the economy. Money did not previously exist. Banks are legally allowed to multiply deposits. This expands the money supply far beyond physical cash. And this growth powers modern economies. Loans help businesses grow. Families buy homes. As the financiers and government benefited, the burden fell to the student. With the cost of education skyrocketing, the loan paper became a necessary evil. Became the fuel of the entire system. But every loan comes with interest. Means borrowers must repay more than was created. So the system constantly requires more growth. More borrowing. More spending. More spending. More consumption. More consumption. And when borrowing slows, the economy weakens. Because modern economies are addicted to expansion. The entire system depends on confidence. As long as people believe growth will continue, the machine keeps running. But when confidence breaks, the whole system can crash very fast. Modern economies run on debt. Our debt. College is debt. The entire city runs on debt. The worker struggles while the banker profits, all controlled by the government. At first, debt feels helpful. At first, debt feels helpful. It gives people access to things they couldn't afford immediately. Education. Even businesses rely on borrowed money. And for a while, the system works beautifully. But over time, interest changes everything. Because debt grows faster than most people expect.
monthly payments begin stacking up. Mortgage payments. Credit cards. Student debt.
The average worker is trapped in an endless cycle, running faster and faster just to keep up with the rising cost of living, while their income remains stagnant.
Working not to build wealth, but simply to survive. Every interest payment transfers wealth upward. Every interest payment transfers wealth upward. To financial institutions.
Funds as agreed. It's quite heavy. Yes, make sure that wheelbarrow holds up. Don't worry, we have a strong recovery plan. Thank you.
Countries borrow enormous amounts of money, pushing repayment into the future.
The modern world sits on top of a mountain of debt.
Trillions upon trillions of dollars. And most people never realize how deep it goes. Because debt makes systems fragile. When people stop paying, suffer losses. Businesses cut jobs.
Unemployment rates climb, the lines for aid grow longer. Despite the struggles of the average worker, those at the top continue to prosper.
Economies enter recession.
But while most people struggle with debt, another group plays a completely different game.
The rich don't work for money. They own systems that generate money. Poor people sell labor. Rich people own assets. The middle class usually trades time for income. Wealthy people focus on owning systems. Businesses. Businesses. Real estate. Stocks. Stocks. Assets that increase in value. This creates a powerful difference. Workers earn active income. Owners earn passive income.
Then they reinvest that money into even more assets.
This creates compounding wealth. Money begins growing exponentially. Which is why wealth gaps expand over time. The system rewards ownership more than labor. Ironically, banks also favor people who already own assets, because assets can be used as collateral.
So wealth creates access to even more wealth. Struggling people face higher barriers. Over time, money naturally flows upward. Not because the rich work infinitely harder, because they own productive assets. The system rewards leverage. Actually, financial leverage. This system has a dangerous side. Because when asset prices rise too fast, begin speculating. Borrowing heavily to chase profits. This creates financial bubbles. Eventually, bubble bursts. And now for the moment you've all been waiting for. The activation sequence is complete, and we are officially online. Central bank, under government direction, injected trillions into the system. They often create more of it. But if money increases faster than goods, prices rise. That's inflation. When economies begin collapsing, governments and central banks intervene. Central banks control the money supply. And their most powerful tool is creating new money. Sometimes this stabilizes markets. Market surges upward, with diverse businesses not only surviving, but thriving. This rapid recovery signals a strong economic return. And economies begin moving again. But increasing the money supply has consequences. Because more money now competes for the same goods. Prices begin rising. Food becomes more expensive. Energy becomes more expensive. Housing becomes more expensive. And wages rarely rise fast enough to keep up. This is how inflation quietly reduces purchasing power. Your money slowly buys less over time. This is why older generations remember cheaper prices. Because inflation compounds continuously. But asset owners often benefit during inflation. Real estate prices rise. Stocks increase in value. As the workers create the wealth, the investors, bankers, and government appropriate the profits, leading to a massive accumulation of capital at the top.
And so the cycle repeats. Growth. Debt. Speculation. Crash.
Money printing.
Inflation. The entire world economy functions like a giant machine. The modern financial system is a giant loop, and every piece connects to another. Most people only see their small part of the system.
The global money system is a vast, interconnected web. Trillions flow between banks, governments, and corporations.
Now the entire map becomes visible. Banks create money. Governments expand debt. Workers exchange time. Assets absorb wealth. And inflation quietly taxes everyone. So here's the answer to the question from the beginning. If governments printed enough money to make everyone rich, the money itself would lose value. Because wealth is not paper. Real wealth is productivity. Is only the scoreboard. For the first time, the hidden system becomes visible.
Finally see the whole game. Stickman enters the maze, he encounters the complexities of modern finance. But by bypassing the bankers, he opens the door to a world of opportunity.
Very few ever understand the map.